Good morning, traders. Today is August 5th, Saturday, early morning. My name is Brad Matheny. This is the top-down investor video. We're going to go over all the details today, and I've got a very strong warning for you. We've seen a big drop in the volatility index, indicating we're still moderately bullish, still toppy. We've seen the smart money index move up from 46 or so last week up to 53. It is still in trending mode, but getting very close to a higher probability volatility event, like a crisis event. The global and U.S. markets are mixed, kind of rolling over a little bit. U.S. stock market valuations is 2.81 and falling. This is a pretty good indication that we're not seeing any real growth right now. And the fear index is 6.45 and rising. It's come up from about 5.2, so we're getting back into a fear cycle. The sentiment index has dropped considerably and is moving downward in a shorter term basis. Generally, ladies and gentlemen, we are just like we are right over here. This is an SPY chart. We've rolled all the way up, and I'm going to show you some examples of what I think means that we are looking at a very big consolidation flag, okay? We're basically behind the scenes. What is happening right here is we've got a large flagging consolidation setting up across various sectors that looks very ominous for a downward cycle trend over the next 60, 90 days, maybe a lot longer. It looks like we're nearing the edge of a cliff. So let's take a quick look here and go over what we're going to look at first. The Ment rotational modeling strategy, which is what we just looked at, our game plan. So now let's come back over here to the Ment rotational modeling system and understand that the Ment rotational modeling system is still bullish weekly, bullish daily, hasn't changed. We've got 8.06% in our total position. We were at new all-time highs last week, came off of that by about 80 grand over the last couple of days. We were up at almost 1.6 million in profit since the starting in 1996. It's been a fantastic little run here. We had a very good rotation to the upside. We'll see how this plays out and if my analysis is correct. Long term, the only major sector change here is that crude oils turned bullish on daily, and then XRT retail has turned bullish on daily just last week. Beyond that, everything is still bullish. Bonds are still bearish. Now, this is the big news on bonds. Bond yields have started to skyrocket, which is a sign that fear is coming into the market with regards to satisfying global debt requirements at higher interest rates. So if you have not followed my research, you should be safely protected in this allocation mode here. If you are more heavily invested in stocks, you need to, cut back very quickly. You need to be aware of the risks that are taking place. I started pulling everyone away from this risk factor back over here. We rode it up nicely. We bought the bottom, and right over in this area, I started telling you to pull away from trades, cut down allocation, protect your stops. You do not want to be overly aggressive right here, okay? You really don't. I'm trying to tell you. Okay, so now this is the historical results of the Ment rotational modeling system, and we're looking at, again, all-time highs. We're looking pretty good for the year, holding up pretty well. I think the S&P is going to roll back downward back in this area, so be aware that we've got a potential 12 to 15% downside move playing out. And then this is our historical results quarterly and monthly. We've been holding up pretty well over here, probably going to roll back downward if the markets roll into this sideways phase, which is fine. This is a 3-year, 2019 to 2023. You can see how well we've overperformed the SPY. And, again, the Ment rotational modeling system is performed by a little over $500,000, overperformed the SPY. And even if we were to roll a little bit downward, we'd still be 2x, almost the 2.6x the SPY overall. So let's continue onward. Now I'm going to go back over here to the beginning of the charts and then highlight the sector analysis review, which we've done, and now the custom index review. So now the custom index review, ladies and gentlemen, the accumulation phase index is stalling out again. It's been very flat for 4 or 5 months, not indicating any real trending, even though the SPY has moved higher. This is an exhaustion rally phase, like I've been telling you. We do need to be cautious of some sort of a volatility event here. You can see in early August, it's only a couple of days, but we've got a fairly strong downward trend. It sure looks like we're nearing a cliff, and I'll show that to you in a minute. The devaluation cycle phase index, this is a weekly chart. I wanted to extend this out to show you that we kind of flattened out. We didn't see any real growth here, and now recently, look at this. We started really moving back down to the low area here, okay? So we could break this channel down here, could get very, very interesting if we break into a new low moving downward. And when I'm saying that, I mean we could be looking at kind of a moderate downside move, a bigger unwinding of the U.S. equity and credit markets. The custom ratio index is flattening out. You can see it never really recovered after that rally phase in early July. That tells us that most of July over here, the last 3 or 4 weeks, including this bottom over here in June, was a pretty solid rally phase, a pretty solid exhaustion rally right up in this area. Now, if we roll out of here, if we stall up in this area like we had done before, we're looking at a move back down into this area, okay, which is, again, about a 12 to 15% downside move, which would put us back over into these areas right over here on the SPY, and it looks like that's what's pending right now. Like I said, I'm going to show you in the charts here in a minute. Fear index moving upward, 6.45, big rotation, engulfing bearish pattern on the SPY pattern, and the sentiment index has stalled back out and moved dramatically lower. You can see this rejection area here, and rejection here, rejection here. Now I'm really concerned about a downside move back into this area, okay, back into this area over here, which would essentially put us back into this area or this area here. And I think it's going to come fairly quickly. I think it's going to unwind, you know, maybe 4, 5, 6 weeks. And we will be down into this area. And then maybe another 3, 4, 5 weeks, maybe very late September, October, November, maybe we start to get a base or a bottom. But I think this unwinding that I've been telling you, this top that I've been warning about, is finally here. I think we've seen the exhaustion rally. I think the Fed move and the credit markets are really going to unwind. We just need to see how severe the markets react to this, okay? Valuation trend index, again, one of my favorites. You can see here it is just flattening out, okay? It is just really going downward, 2.81, flattening out, down near these lows over here. If we get this moving downward, which would actually be an upward move, so to 3 or 3.03, we would end up with a pretty strong downward trend in the market, breaking below this support and moving into a very solid downward bearish trend. You can see here that we are already in this unraveling phase. This is the devaluation phase, lack of accumulation. And I think that we're looking at, you know, really another downside leg here. It's going to probably pull back down into this 405, 410 area and try to find support, the SPY. FANG's index, big topping pattern. We don't have a breakdown yet, but I mean, this is this chart pretty much tells you what you need to know. This is the big rally phase, the big speculative phase, came back down here, base bottom, rallied back up. This was the rally that everybody piled into right over here. And now look at this. We're back up near these highs. We're back up near these extended levels. And interest rates are high. Consumers are pulling away. You're seeing that in subscription services and other services. You know, Apple just recently had a big dump. I'll show that to you. Get ready. Like I said, I think we're looking at another downward leg here, maybe back down into this area, 180, 160, 170, trying to find some support. And FANGs could unwind fairly quickly. Okay, top-down review. NASDAQ to SPY, this was the extended rally phase. I've highlighted this every week. came back up to my upper channel and paused. That's just above these highs here and near these highs back over here. You can see they come right across here. Big engulfing bearish pattern set up this week. This is a weekly chart. Really, you know, we're targeting this area right here on the SPY, 404, 410, and we're targeting this area here, 12,750 to 13, call it 100, 13,100. That's where I think we're headed in this move. I think we're going to come back down here. We're going to wipe out this rally phase. We're going to try to find support in this area and down here in this area, 395 to 410, and then attempt to move higher. And so again, as I've been warning you and trying to keep you abreast of the risk factors at play, if you were ignoring it right now, you had a nice little rally. By the time you realize what's going on, by next week, it might be pretty much over. And I think you need to be aware that we're looking at a pretty big downside correction, in my opinion. Okay, SPY cycle patterns. Next week is a carryover trend. Sorry, we have an inside breakaway, carryover, bottom, and then up, down, up. I think I went over this last week, but inside breakaway and breakaway tells me that we're going to get Monday, Tuesday, some bigger trending bars. Then we get a carryover trend, which is likely going to continue whatever direction the breakaways are. We get a bottom set up, indicating that probably the market's going to be going downward, I would assume, and try to set up a bottom. Then we get what's called an up, down, up. So that would mean that this would be up, this would be down, this would be up, okay? Or hypothetically, this would be up, this would be down, and then potentially this would be up with a top resistance. Top resistance here on Monday the 14th indicates that we're looking to find a new resistance area. Then we get a breakdown, then we get a weekend gap, which is not a weekend, so this could be a gap. We get a gap lower, and then we get another top. So this is another indication that we're running into resistance, okay? That's what this is telling me, is we're running into resistance, we're running into topping, we're getting gapping, we're getting breakdowns, and these resistance areas, breakdowns, gap lower, tops, indicate to me that we're resistance, 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 resistance. It's basically beating it down day after day in a moderate rollover downward trend. We'll see how it plays out, but I see downward trending here. And this has moved to, short term's moved to warning. Bullish, long-term trend has stayed here in bullish. Daily bias hasn't changed, believe it or not. I've been watching it every day. Weekly bias has stayed the same, downward. So again, if it moves into bearish trending over here, and the daily bias moves into bearish trending as well, then we are looking at downward predominant bias trending moving forward, and we'll see how it plays out. Okay, we've gone through this, I believe. Yep, let me go past these. Stock market index weekly. Here's a big topping pattern in the U.S. stock market index. You can see this engulfing bearish pattern right up near this middle standard deviation channel, just like I mentioned. We don't have really any confirmation yet. We do need some sort of confirmation to the downside. I'll show you why I think we're looking at a pretty big risk factor here. I would tell you that we're very likely to move down to this apexing pattern here, this middle of this flag, which will be 1,090, let's call it, or potentially down into this area, 1,100. So that's going to be a very strong support area. That puts us back again right into this area, potentially right into this 390 to 404 area. That would be a very solid downward move here to still maintain the long-term trajectory to the upside. If we get below this level and or below this, let's call it 1,000 level, then ladies and gentlemen, we're looking at a very deep potential global event, okay? So this is going to be a very telling event for everyone to see how this plays out, whether or not we are going to extreme lows or whether we're going to find support in this channel here. Volatility index, this is what I warned you about. I kept telling you over and over again that this was a very toppy pattern, bullish toppy, bullish toppy, bullish toppy. Remember all the videos I told you about how I would not trust this rally up in these areas. And here we go. We get the big breakdown. Now, 1405 is still bullish, okay? It is still generally bullish. We would need to see it get down below this 8, 9, 10 area probably 9, 10, 11 area to move into bearish trending. So we would need a bigger downward trend here, or like we saw back over here in COVID, don't actually have it on the chart. We need to get down below this 8, 9, 10 area to move into bearish trending and downward channeling. That's what the downward trending looks like right here. So if we get into a fairly quick move, we could see this come all the way back down into this area, rally back up, stall back out, and then attempt to around August, September, October, maybe November, start to rally back to the upside. But it looks very ominous to the downside right now, folks. Okay. Okay, so now let me spread this out and show you a couple of charts to tell you what I really think is going on here. This is the SPY. Let's take a look at IYR. Okay, IYR weekly. You see this flagging formation setting up here. Okay, we're getting this big breakdown here. Looks like we've got this flagging formation on the downside. Look at this, folks. It's getting set up to attempt to break through this channeling area. And if it breaks downward through this channeling area and gets below this support, where are we headed next? We're headed back down to COVID lows. Okay, it's looking very, very interesting. Let's go IYT, Transportation Index. Okay, we had the breakout to the upside. You can see here, we've got a breakout. We've got a follow through off of these COVID lows. You can see we have this breakout. We're back up near these upper channeling areas. Now, if this were to fail, because we've had these rejections up here, if this were to fail as a rejection here, then we would be looking at a downward cycle phase to retest this apex level, potentially back down to retest this low level, depending on how deep the market goes. And if we end up in a global contraction phase, which remember, this actually retests, the pre-COVID levels. And if we get below the pre-COVID levels, then we could see a deeper downside move. And that would be very disastrous for us overall. Okay, it would really be a problem. So let's take a look at XLF. Now, I'm not saying that's exactly what's going to happen. I'm saying that generally we're looking at this pattern, and look at how it appears to happen over and over again across pretty much all the sectors. So I had drawn these earlier, showing people a setup, a 33 thrust setup, it looks like. So we're looking here at a weekly chart. We've got a potential breakout to the upside, which could happen. Understand that we still have this A, B, C, D, E type of pattern. So if we get some volatility, we could see this roll downward, could see this roll upward. But again, if we see it break to the downside, take a look at where we're at. Generally, with all of these symbols, we've got support here. We've got resistance coming across here. If we were to get a breakdown to the downside, we would need to see it hold this level, which is, again, pre-COVID support level. Okay, if we can't hold that level, we're going to come back down to this gap level. Okay, and if we can't hold that level, then we're coming back down to COVID levels. So ideally, ladies and gentlemen, we're at an inflection point. I mean, really, we're at a big inflection point with regards to what's taking place in the market and how the market's going to operate. Okay, now the major indexes don't show it to you. So QQQ. Major indexes show this big exhaustion rally here. Okay, what really took place, if you ignore this exhaustion rally and you pay attention to the consolidation channel that actually came across here, I'll carry it across here and across here. What really took place in this area, folks, was we had a rally up to this area, we had rotation, we had another rally, we had rotation, and that's where we're at right now, okay? This doesn't really exist because this is an exhaustion rally. This is a blow-off top that distorts what's actually taking place. So let me try to show this to you with an example. Let me see if I can pull something up. Nope, that's not going to work. Let me, what was the other one I was pulling up? IYR. Okay, try to get these on the same chart. Well, they are on the same chart, so let me change the scale. Pin scale to new left scale, and we'll get rid of pin scale to new left scale. Okay, so very difficult for you to see. This one may not be, let me turn this one off. So this is a pretty good example of what actually took place. You can see the consolidation down into this area through retail, and you can see how the market really flagged out over here, okay? And what I'm trying to tell you here is that we ended up with kind of a flagging formation here and a flagging formation here. And again, this is the QQQ on the candlesticks. So this is what really kind of took place here, ignoring this. And where we're at right now is we're pretty much right here, like I had drawn. So this is where we're at theoretically in price term. And this is all over the place. This is really, I mean, I can pull up, maybe not Microsoft and others, but I can pull up, you know, dozens of examples like McDonald's. Okay. Here's a rotation. Here's our flagging formation. Here's our upward flagging formation. This one got a little bit of an upward pennant formation, but you can still see this is our flagging. This is our sideways. Here's our flag here, coming across here. Here's our flag here, coming across here. And look at where we're at here. Here's the same flag, but flag into the upside, breaking down very, very hard. Very, very hard. Okay. Let's try LEA. Learjet. Okay. Better example. So here's our flagging formation. You can almost see it straight across this area and straight across this area. And then we have our flagging formation here, coming across here on Learjet. Flagging formation coming across here on Learjet. We get a little bit of a breakout right here. Okay, a little bit of a kind of a rally phase right here, which exists a little bit right here. But now we're getting that rollover back to the downside, and I believe we'll see the same rollover back to the downside over here. So this is setting up very ominously throughout major indexes, okay? It's really, really kind of shocking how we're seeing the same setup over and over and over again, I am, in these charts. And in fact, let me come over here and show you, because I was looking at these and it was just amazing to me. So these are the Ment movers, the new Ment movers, and they've got a number of upgrades here in the Ment movers hot list. But as we take a look at some of these, we were looking over here at these weeklies, these Lamar and KO, and so let's take a look at Coca-Cola. You can see the same setup. Again, the flagging, the rotation, the breakdown to the downside. And again, remember that these are already indicating that we're getting downward trending right here with the 33 thrust in the pop shift pattern. Let's take a look at this SJM. Again, look at the pattern, folks. Look at this. Yeah, there's the 33 thrust potential upward pattern. Consolidation, consolidation, flagging, consolidation across here, consolidation across here. I mean, we are getting the same flagging formation, and it worries me that the systems I have, the short-term systems and the weekly systems, are all pulling into this bearish trending. So SMG. So we need to see how this plays out. SMG, huge downside move. Oh my gosh. This is a little different, but we still have a flag here. We still have the flag here. We are seeing downward trending. We're seeing the same flag here that I keep drawing every time. And pay attention, because if we cannot hold the support, if we get this big breakdown over the next 2 or 3 weeks, we could be looking at a very big downside move. Honey, H-O-N, I believe was moving down. Yep, same thing. Honeywell, big flagging coming right across here. So here we go. Look at how interesting this breakdown is. Just broke below it. Really could get just, I don't want to say ugly, but could get right down into this level here, kind of like in the mid-COVID area, and maybe even deeper down into this area here. So be aware that we're looking like we're seeing a big shift in the market. It's happening in quite a bit of symbols, and you can see that everything's turned moderately bearish. We still have some bullish symbols here. Let's take a look at HD or Goldman Sachs. Let's take a look at Goldman Sachs. Look at that, another flag. What do you know? Okay, so what does this tell us? This tells us that the whole market right now is kind of in a transitional shift. Okay, you've got rejection, you got rejection, you got rejection, you got rejection down here, rejection down here, rejection down here. Okay, looks good. Okay, except for the fact that this move right here is either going to resolve to the downside, which becomes very dangerous, or it resolves with volatility and then back to the upside. So we need to be prepared for the downside move if it happens, which is why I've told you to stay, protected, stay prepared, move to a 20% stock position, 40 to 50% cash position. You do not want to be chasing this. Remember, this is weekly, and everybody's been chasing this through June and July. So basically, from this area here, June, May, June, right here. So from this area here, everybody's been chasing that little bit of movement to the upside on the SPY or the QQQ chart. That's been your rally phase. Okay, does that look like a big rally to you? If you look at this, compared to what the QQQ chart is, we're just in a sideways consolidation. The only thing that's really gone up is technology and certain speculative stocks. So we're basically looking at the end of the wave, the potential rejection here. We need to be very, very cautious of a downside move. If you have not already protected yourself, do it. Okay, I'm trying to warn you right now that the TT scanner hot list and the Ment movers hot list are really starting to warn of some downside moves, okay? Lots of bearish trends, lots of negative trends, lots of downward movement, okay? It's really, really looking, like I said, you can pretty much pick a chart. Well, this one, of course, I'll pick one that doesn't look very good. Let's go all state. Okay, Allstate. There's a good idea of where we're at here. Understand it. Here's the mid-COVID support channel. Here's the lower COVID basing bottoming. We have unwound all of this. We're now back into below COVID peaks here. We never really saw the big speculative rally phase. You can see that we've got a bit of a channeling pattern coming in here, kind of like this, maybe a bit like this. And you know what? If the markets unwind, we're probably going to end up seeing something along the lines of this, consolidation, maybe into the middle area here before we try to find some support. And this would be a retest of these mid-COVID support areas back over here. So understand that we are very, very close to what I believe is a downside event, unwinding this big excess phase. This has been a big excess phase that played out through most of the market, and this little move here is going to basically unwind the rest of it, send the Fed into potentially a more quantitative easing mode. Let's take a look at Apple. I showed you. Apple had this big breakdown last week, losing subscribers, as I understand it. We saw this big breakdown. Let's see what the news is here. Operating earnings drive a net profit increase. Fourth quarter outlook causes concern among investors. Okay, so here's your rally phase. Remember, what really took place is this. We were in this channel, we came across this channel, and we flagged out. We were in this channel, we came across this channel, and pretty much flagged out. That's what really happened here, okay, is we moved up and we rolled into this channel, potentially. What happened in the real world was hyper speculative bubble right here that kicked the markets up into this rally phase, which is now going to unwind. And if this is going to unwind back down to normal levels, you're looking at a 21% to 25% drop in Apple to get us back down to normal apex levels, maybe a bit further to get us back down into these levels here. So you start taking a look at recent support, and you can come all the way down to these COVID areas and say that we have a potential for minus 40% to minus 48%. I would say that this minus 17 to minus 28% area, which puts us right about here, is probably the most likely candidate right now, coming right down to this area or this area would be our most likely candidate for a downside move. But this is that late May, June, July speculative top. That's what this is right here. This is traders pounding into innovation, FANGs, looking for another little rally. They got it. It's basically they piled into it. They drove it up. They drove this nice little rally up. And now we're looking at an unwinding phase in this area, which could be devastating. It could really be devastating to people that are unprepared right now. And you know what? I don't even know if we have data, but oops, just for the heck of it. No, we do. Okay. Okay, even in 2000, we had kind of the same thing. So we had the rally up to the late 1999 peak, came back down out of it with a big congestion, then rallied up to a second speculative wave. This was traders thinking that it's not over, we're going to get back into it. And then it finally peaked, came down to a new low, consolidated, rolled over, and then eventually collapsed. And this could be something that we're looking at later on down the road, but we may not see the collapse, okay, until 2028, 2029. We may see this rotation, and we may see this kind of a pullback which would put us, when you think about it, we come back over where we're at right now. If this is our first rally, hypothetically, and this is our second rally, we could be looking at a move very similar to, like I said, back down into this area and then potentially consolidating. So that would put us at regular scale. That would put us at around 120, 110 Apple. And that would be a very reasonable move given what we've seen. So be aware that, you know, like I said, we are looking at a very ominous downside move. That top I warned you about 2.5 months ago, telling you to be prepared. It's coming after SPY reached 437. I think we're sitting right at the edge of that cliff right now. I think it's going to be a big, ugly move that most people aren't prepared for. So get ready. Talk to you soon.